Welcome to the third installment of YPTC's Staying Afloat Arts and Culture series. My name is Justine Townsend, and I'm one of the leaders of YPTC's Arts and Culture Specialty Group. This week, we're talking about all of the financial documents. Last week, we covered the weird stuff required on the application checklist for the Shuttered Venue Operators Grant applications. The SVOG applications will be available when the portal opens on April 8th. So let's get into it. Before we get into it, here's a little bit about YPTC. We're a professional services firm that specializes in nonprofit financial management. We work with nonprofits anywhere and everywhere. We're nationwide. So this is our third installment. Like I said before, we covered the weird items last week, and in the first week, we covered the getting your SAM registration and your DUNS number. So if you need either one of those, here's the link to our website. Also, there will be a resources page at the end where I will link those again. So a few reminders about the SVOG. You have to apply for your Paycheck Protection Program loan prior to applying for the SVOG. So while the PPP has been extended through May 31st, you need to already have your loan number in hand when you log into the portal on April 8th. So if you're going to apply, now is the time, because you need to get your loan number, so you'll need to get approved prior to April 8th. So you have that number in hand. The SBA has not released the application, so we are using the preliminary application checklist. And the application it does not look like the application will be available to us until the portal opens on April 8th. There's now a link on the SBA's website so that you can go look at the portal, but I mean, it's just a landing page. There's not much to look at. It just says portal here. So these are all of the financial documents that you will need to submit on April 8th when you log into that portal and you submit your application. We're going to go through each one of these in detail and cover exactly what is needed, and how to pull it together, and what you need to get, and what is, if you already have it, then you can submit it, but you don't need to go crazy getting it, because there's quite a few of those items. So there might be some time savers in here. The first thing that you'll need to submit are tax returns. You absolutely have to submit your 2019 tax return. For nonprofits, this is going to be your Form 990, your return of an organization exempt from income tax. If you're a nonprofit that is required to submit a 990T, you will also be required to submit your 990T for your 2019 return. A 990T is just the place where nonprofits report unrelated business income. So if you don't have unrelated business income, if all of your income and all your earned revenue comes from your core mission and from the work that you do, then you won't have any of this unrelated business income. So you won't have to file that. You won't have to provide that 990T. If you have already filed your 2020 return, then you will need to submit it. If you have not filed your 2020 return, then you are not required to submit it. For other organizations that are not nonprofits and that do not have a 990, you are going to submit whatever return is normal for your organization. So that might be a 1065 or an 1120 or an 1120S or a 1040 with a Schedule C. Especially, I think that'll be most common amongst talent representatives. If you have not filed your 2020 return, same thing for for-profit organizations. If you have not filed your 2020 return, you do not have to rush right out and get that done before April 8th. You just will need to submit your 2019. Okay, quarterly income statements. These quarterly income statements must be provided for both 2019 and 2020. And you will need all 4 quarters of 2019 and all 4 quarters of 2020. Now, this is going to be difficult for some of you that have a fiscal year end that is not at a normal quarter year end. So if your fiscal year end is May 31st, then you're not going to be able to use your normal quarterly income statements that you might be preparing already, because these are going to be calendar year quarters. So you're going to take January, February, March. That's quarter 1 for 2019 and quarter 1 for 2020, and so on. The quarterly financial statements will need to be signed by a primary officer. For nonprofits, we are recommending that this is the board treasurer or the executive director, but this could be a CEO. This could be a board chair. This could be, in some arts organizations, you might not call them an executive director. You might call them the general manager. So whoever is going to sign the application will need to be the one who signs the quarterly income statements. You need to provide all sources of revenue and expenses, and you want to delineate them. And don't worry, we're going to go through that detail in a second, because the revenue, the way they want you to show the revenue and the amount of detail you need to show on the revenue is probably different than your normal financial statements that you're preparing. You need to segregate earned revenue from contributed revenue. And then you need to report expenses as you normally would on your financial statements, except for any special event expenses. You're not going to present those net of special event income. So normally we would present special events. Here's a special event. This is our gross. This is the expenses, and that's the net. You will pull those special event expenses down into your fundraising expenses. Those will not be presented net. The other thing that you really need to focus on these quarterly income statements is going to be very important for your organization and for you to think about is they need to tie back to your 2019 and your 2020 tax returns if you've already filed 2020, and also your audit, which we'll get to in a second. If you have a different fiscal year end, so your 2019 990 is as of May 31st, 2019, and your 2020 990 is as of May 31st, 2020, then your quarterly financial statements are not going to line up perfectly with your 990, but in total, the numbers should reflect, they should be accurate, and they should reflect what you have reported to the government in the past with your 990s and in your audits, if you're required to submit those. Okay, the other piece that we want to get into in detail is this revenue, the earned revenue. So earned revenue examples that you need to delineate: ticket sales, merchandise sales, subscription revenue, tuition. If you have, a lot of arts organizations have an education component, museums have an education component, lots and lots of different kind of arts and culture organizations might have this education component, and you might have tuition. So you want to report that separately as earned revenue. You might have where you sell actual advertisements in your playbill or in your programs. This is where that would go as well. Any rental income. So if you were renting out your facility, your venue, all of that rental income. Any licensing or royalty agreements, conference fees, again, if you're renting out that space or hosting conferences in that space, that's also earned income. Program fees, contract agreements, sponsorships, the membership dues. So you'll want to, you might have other benefits that are bestowed on sponsorships, from sponsorships. So that cost of admission, you're going to break that out as well. Any other benefits that are being awarded to sponsors or underwriters, those you're going to break out here. Also membership dues, you'll break that out here as well. any benefits that come from membership dues. For example, museums often have where you can become a member and get unlimited membership for the year. So you'll need to think about how many times somebody would visit before they would exhaust all of that. And if it's not that many visits, then probably all of that membership is really going to go under admission as earned revenue. Other examples where we might want to break out that revenue would be in a special event. And we talked about that a little bit when you present that. Normally we present those net. With special events, you want to pull out the dollar value of the ticket. So the meal, the music, the dancing, like you normally do when you send out invitations to a special event, you put the fair market value on that ticket, and the remainder is what you tax receipt to that donor. That amount needs to be pulled out as earned revenue. So let's say tickets are $500, but you have a fair market value of that ticket is $200. That means you'll have $200 of earned revenue for every ticket you sold and $300 of contributed revenue for every ticket you sold. So you'll need to break that out. If you have regularly put on these special events, then you know that that information is usually in your 990 in the Schedule G, where we disclose our special event activity. Okay, so audited financial statements will be the next requirement. If you are required to have an audit, not all nonprofits get audited. If you live in a state that requires an audit, if you have debt covenants that require an audit, if you have funders that require an audit, if you have any reason whatsoever that you get audited, then they want you to submit your audit. But if you do not have any reason to get audited and you've never been audited, that's okay. You will not be required to submit it. Now, if you have not finished your 2019 audit, then you need to submit the most recent one. So if you finished your 2018, then you'll need to submit that. If you used to be required to have an audit and you're not required to have an audit anymore, but the last time you had an audit was 2018, you could submit your 2018. If you've not completed the 2020 audit, don't worry. You don't need to rush right out and complete that 2020 audit. You just need to submit the most recently completed audit. And again, just make sure that that audit and tax return tie back to your quarterly financial statements. And if they don't, that you are prepared to provide a reconciliation for why they don't. Normally in the 990, there's a little reconciliation where it reconciles back to net assets, because sometimes we have things in the audit that we can, in our GAAP financials that we can report that don't go in our 990. For example, in-kind services, we don't report those in our 990, but we do in the audit. So we might have some variances there. And that's why the 990 has in it a little reconciliation schedule. And you could use that to get you started. Okay, single audits. You only are required to submit a single audit if you are required to have one. Most likely, you've not had to have a single audit in the past because you need to have received $750,000 in federal funds and expended $750,000 in federal funds in a single fiscal year in order to be required to have a single audit. Now, I do want to point out that after this year, you may be required to have a single audit because the SVOG and the PPP are both going to be qualifiers for a single audit. Both of those are federal funds. So if you expend all of those and they exceed $750,000 in 2021 or in your 2020 fiscal year, if you got a large enough PPP, to qualify for a single audit. Make sure that you're aware of that, and you will need to submit it. If you have not completed the 2020 single audit, that is okay. You have time. A single audit is just a program-specific audit of those federal funds. It's a compliance and financial audit. And I also just wanted to point out and let everybody breathe a heavy sigh of relief who just heard, oh no, the PPP qualifies for a single audit, and now I have to get one for 2020. So normally you only have 9 months from your fiscal year end to complete your single audit. However, the OMB did release an extension. So on March 19th, we got a 6-month extension. So if your year end was June 30th of 2020 and you did need to do a single audit because of PPP, then you would have until September 30th, 2021 to complete and submit that single audit. So that would, yes. So you would have until September 30th, 2021. Sorry, just had to think about that for a second. Okay, so now the next thing is an indirect cost rate agreement. If you've never had a single audit, you most likely do not have an indirect cost rate agreement either. If you have had a single audit, then you will know whether or not you have an indirect cost rate agreement, because this will have to have been negotiated. And it is kind of a long process to negotiate indirect cost rate agreement with your cognizant agency. And the cognizant agency is just the agency where the nonprofits federal funding, where the largest amount of the nonprofits federal funding comes. If you do not have a negotiated indirect cost rate agreement in place, then you can elect to use a 10% de minimis rate, but you do need to elect it. Okay, then the last thing that we'll need to provide is the payroll statements covering February 29th, 2020. So they're looking for your employees on payroll as of February 29th. So you want to include any payroll reports that include that February 29th, 2020 in that pay period. So for example, if you have, and I know lots of organizations have 2 different pay schedules, especially if you have union employees, because sometimes those union employees have a very specific pay schedule that you have to pay by, or if you have the stagehand union, they have a very specific schedule they need to be paid by. So if you're running 2 different payrolls, then you'll really need to think about this. For example, let's say you paid all of your company employees on March 1st, 2020 for the work that they performed between February 15th and February 29th. So you would want to provide those March 1st payroll statements. And then let's say you had some other employees that you had to pay on a different schedule, and you paid them on March 7th for work performed before February 15th through February 29th. Then you would also have to provide those payroll statements for that March 7th payroll, as well as the March 1st. So just make sure that whatever payroll statements you're providing, that you are providing all of the payroll statements for that February 29th, 2020 payroll, everybody that was on payroll on that date. Since they're looking for this because they're looking for one, that you were actually in operation on February 29th, but also you're going to have to provide, remember last week when we covered the weird stuff, there was all that weird stuff with employee lists that you had to provide. And you had to provide an employee list that was complete and included everybody from February 29th, 2020. And you would have to say whether or not you had furloughed those people or they had been terminated. But There's a couple of different reasons for this. Just know that you're going to have to provide an accounting for all of these people on that employee list. So this was everything. We covered the tax returns. Remember, you have to submit 2019. If you've got 2020, go ahead and submit that. Those quarterly income statements, all 4 quarters for 2019 and all 4 quarters for 2020. And you got to break out that revenue, especially the earned and contributed. You really need to look at those that have crossover. You have audited financial statements. You at least need to provide the 2019 if you're required to have an audit, and 2020 if you have it. Your single audit if required, and then indirect cost rate agreement if you have one. And then those payroll statements covering February 29th, 2020. So once you have all of those things, you're on your way to a completed SVO grant application. So join us next week for our next installment on the Arts and Culture Spotlight Series. Next week, we're going to release on April 9th, and we will be covering kind of all of the questions that we're getting over the last couple weeks. After that weird stuff, as people are starting to prepare these, as our YPTC associates are out there preparing the documents for our clients, we're getting questions, we're finding out where the complications are, and we're going to cover those next week. This is our resources so that you can go and watch last week's and the week before that, so you can watch installment 1 and installment 2. And then also there's the SBA's website where they have their FAQs. I just want to remind you how important it is to pull all of this together. Once the portal opens and you submit your application, you will not be able to submit an incomplete application, and you will not be able to correct any issues with your application afterwards. After you've hit submit, that is going to be it. There will be no corrections. So you want to make sure that everything is as accurate as possible ahead of time. If you have questions in the meantime, don't worry. You can contact us and we can assist you with this. If you have specific questions, if you need specific help, you can engage us specifically to do that work for you. So don't be afraid to reach out. We can help. Thanks so much. And I look forward to seeing everybody again next week to talk more arts and culture.